So this video will teach you how you can draw your supports and resistance when you're analyzing your charts. Okay, how you can draw your supports and resistance, very easy. Okay, now I want you to look at the market as a place where there is war between the buyer and the seller. Okay, there is war between the buyer and the seller. Now you might be the buyer or the seller. Okay, you might be the buyer or the seller, but there is war going between them. When I mean war, they sell, the buyers buy to a certain extent. When sellers start selling, the price start going down, just like an actual market. Okay, we call it the bull and the bears. The bull are the buyers, while the bears are the sellers. Okay, so it is a battle between the bull and the bears. That is to say, between the buyer and the seller. Okay, so now I want you to actually look at the market. I want you to look at the market as if there is a battle between these two people, the buyers and the seller. So I want you to know this: when there is more quantity of, or let me say, when there is more buyers in the market, it pushes the market up, and when there is more sellers, it brings the market down. Hope you understand. These two people are fighting over price. The buyers and the sellers, they are fighting over price. Now when the sellers keep selling, it pushes the market down, the assets will go down. But when there is much buyers in the market, it causes the price of the assets to go up. Hope you understand. Now I'll be giving you a full definition on how you can actually identify your support level and your resistance level. So let's dive in. So in this video, I'll be teaching you how you can identify your support and resistance. Now, I gave a definition of what support is. Supports are the points where the buyer's interests are high or buyers find the assets cheaper to buy. Now, resistance, this is the point that the seller's interests are high or the sellers intend selling a particular asset. For example, now this is a chart. Okay, this is buy. This candlestick signifies that buyers came in, sellers pushed it down. Buyers came in again. Okay, I'm just giving you a simple definition. Buyers came in and pushed it up a little bit. Sellers could not push it down. Okay, and this same point again, buyers, you understand? That's to show that in this point here, buyers has raising it, have pushing the market up over a period of time, like in the same point. So here is to be called the support. Now, this is how to draw your resistance. You see, it was this sell that brought the market down. This one pushed it a little, it brought it down. So that's your resistance. That's how to draw your support and resistance. For instance, let's say this is a chart and you get a trend like this, like this, like this, and like this. Now, it is very simple. This is the buyer pushing this product, the asset up. This is very simple. Now, the buyer pushed the asset up and the sellers brought it down. Pushed it up again, they brought it down. Pushed it up again and they still brought it down. This kind of trend is called the accumulation stage. Okay, the buyers and the sellers' interest are equal. So this is the accumulation stage. Now, if you are asked to identify the support and the resistance, this is the support, because plenty times the the buyers pushed the market to this particular point. So if you're asked to identify the support, now this is the support, the green line here. It signifies that the sellers could not push this asset down more than this. They tried again, they could not push it more than this. They tried again, they could not push it more than this. Now, if you are asked to draw the resistance, this is the resistance. Why? Because the sellers were not able to break here. Assuming the sellers broke here, for instance, this is no longer the resistance. Okay, but now the sellers could not break this place, the sellers could not break here. So this is the resistance because it met this point. In other words, the support being the point that the buyer's interests are high. So when you check and you go back to your data, when I mean data, you go back to your previous data. So when you check and you go back to your previous data and there is this point that buyers normally push the market up, that is your support. Okay, that is where you should put your support. A point that has tested consistently and a point that have pushed the market consistently. Okay, a point that has pushed down markets consistently. You see a green candlestick, for instance, in the same spot at the bottom. That's to show you that the sellers could not break down and sell. There is a very strong buy in that particular point. That is the support. Now, so the resistance is a point that the sellers' interests are high. Okay, the buyers could no longer push up the market. Whenever it gets to that particular point, they sell. So that's what I was trying to explain. Make sure you click the subscribe button and follow this channel for more insights like this.